Welcome to another episode of our channel. And today I'll be lecturing you guys on how to analyze the forex market. Just like I said in our last video, before you take a trade, you have to do what? You have to analyze the market. And there is a strategy I'm going to introduce to you guys, which is the top-down analysis. And today on this video, I'll be breaking it down piece by piece. So let's get into the physical, practical example of how this strategy works for me. And I believe if you go through the right process that I'm going to give you, it will definitely come out good and you'll be profitable with it. So first of all, we'll be starting with our currency pair. What currency pair are we going to be looking at today? We're going to be looking at the Great Britain pound USD. So on that, we're going to start with the higher time frame. So let's head into our trading view. So as you can see on our trading view, you can see the candles that are being lined up right here. We have the green candles and the red candles. You already know what this indicates. The green candles are the buy candles, while the red candles are the sell candles. So you know that red candle means the market is going downward. The green candle means the market is going upward. So whenever you see the red candle appears on your chart, you already know that it's a sell. When you see the green candle, you know it's a buy. So before all that happens, you do what? You analyze. And now here is the secret of how this whole top-down analysis work. First of all, you have to identify your zone. These zones are the key areas, the key levels where the buyers and the sellers are seated in the chart. So you identify them, those key levels, so it gives you an edge of what you are looking at, what the market structure is actually telling you to do, either to buy or to sell. So today we'll be starting off with marking out our zones. So I'll start off with the daily time frame. Like I told you, we are looking at a top-down analysis strategy. So we are on the daily time frame. We'll mark out our zone. You can see at this point we have 0.1, 0.2, 0.3. So these at this point for these levels, you can see that it's very obvious that the market has reacted up to 3 times on this level. So this gives us an edge that, oh, around this area, we have a zone where the buyers and sellers, once the price, the candlesticks get to this level, there will always be a reaction. So this has already verified this level as a significant zone. So yes, we move on to marking the downward part of the chart, which is, you can see the 0.1 at where the market reacted, 0.2 at also where the market reacted, 0.3, and so on and so forth. So we take our rectangular tool and mark out this level. As you can see, I believe you're seeing my screen, right? Okay, so as you can see now, we've gotten an edge. This shows that on our daily time frame, the market is ranging. You can see the market moving sideways. You see 0.1, 0.2, 0.3, 0.4, and so on and so forth. The market keeps going up, down, and up, down without breaking these zones I've marked out now. Then after you've done this, you move down to the lower time frame, which is the 4 hours time frame, to also see what the market structure look like. So you're trying to find an edge if you are going to buy or you sell. Remember, this should be the first thing you do once you open your chart. So go to the 4 hours time frame. So this is how the 4 hours time frame looks like. I will always advise my students to, look at your chart to the left. That's what we call room to the left. You see what's happening before that day or weeks before the day you are making your analysis or you are doing your analysis. So as you can see, market has been ranging from our daily time frame, and there's a little bit of momentum from the right side. So we also look for zones. Remember, first thing, we're marking out our key level zones. On each time frame we open, we'll try to find out a key level zone where the market has reacted a couple number of times. So we'll move. You can see on this level, level 1 here, level 2, and level 3. There is always a reaction there. So mark out this point as one of our key level on the 4 hours time frame. And also we do same below. So yeah, now you can see it very clear. The chart is now making sense, right? Because it's very easy for you to identify if the market is going downward or upward. So since we've marked out the zone on our 4 hours and on our daily time frame, now we look at the structure of the market. What direction is the market actually going? Is the market moving up or is it moving down? So for you to be able to identify if the market is moving up or down, there is always a series of higher high and higher lows and if it's moving downward, there's a series of lower highs and lower lows. So these are what you'll be looking out for on your chart. So starting off from the 4 hours time frame, we look out for higher highs or higher lows to be able to identify what direction the market is moving. You can see on the chart we have point one. This is the higher, lower high and lower low, lower high and lower low. So since we have a lower high here and a lower low, also have another lower high and a lower low. So we already have two existing swing points. So that gives us an edge that the market is moving downward. So we use our trend line to identify the slope of the chart. So you put your trend line on the first key level and drag it down to the second key level. So it gives you a slope on the chart. So this slope identifies that this market is moving downward, right? As you can see, the market is moving downward. We've already pointed out our zone and you can see it's corresponding with the trend line. So what you do next, you move down to the 1 hour time frame. Now we all know that yes, this market from the higher time frame, the daily time frame, it was ranging. So it's a little bit decisive on that daily time frame. The 4 hours time frame also doing the same with a little structure-like movement from the higher time frame to the lower time frame. Also, we go down to our 4 hours time frame. Now, this 4 hours time frame is now giving us an edge on where we will be taking our entries from, because you've already identified the structure of the market and now you are looking for a perfect entry where you can execute your trade. So this is what I do every time I get to this 1 hour time frame. You always need to have your diary or your jotter by your side so you can jot down some things, some points where you are expecting the markets to react when it gets to that level. What kind of candlestick are you expecting before you execute your trade? All these are what you put together before entering your trade. So yeah, on our next video, I'll be showing you how I'm able to, break down this strategy and also use it to execute a trade on this platform. So stay tuned and, key in with me, like and subscribe for more videos like this.